Today, we are discussing GMO GlobalSign Holdings. Let's take a detailed look at the key points from the first quarter of FY2025 ending December. Their first quarter sales reached a record high, which is quite impressive. However, operating profit has decreased. This decline is mainly attributable to strategic investments aimed at future growth.
That's what it appears to be.
Specifically, they have been developing a new platform for their electronic certification authority and rolling out new verification technologies such as VMC, which stands for Verified Mark Certificate. Logo ownership verification. These initiatives are crucial for understanding the company's current position and its future strategic direction.
In essence, their growth strategy, particularly their approach of pursuing expansion through investments, explains why sales are increasing while profits are temporarily subdued. This will be an important factor to watch in their future outlook.
Exactly, and examining their core strengths will help us better understand their strategic positioning.
I agree.
One major strength is that GMO GlobalSign is the only Japanese company with over 28 years of experience as a truly global electronic certification authority.
That's a significant advantage.
Thanks to this extensive experience, they can quickly adapt to emerging technologies like VMC, Verified Mark Certificate, and trusted timestamping. Correct.
Precisely. Their long track record demonstrates reliability, and their accumulated technical expertise constitutes a major competitive advantage. Another key strength is their rock-solid recurring revenue, also known as recurring income.
Rock-solid recurring revenue.
Yes, the majority of their sales derive from this stable, subscription-based model. This steady revenue has underpinned their growth over the past 25 years.
Understood. This reliable income stream allows them to make substantial investments, such as developing new platforms, and also enables them to increase shareholder returns. For example, raising the dividend payout ratio from 50% to 65%.
Exactly. But of course, the focus now is on how they strategically reinvest the cash they generate. Their global footprint is another plus. They serve approximately 230 countries and regions, particularly in competitive markets like the US and Europe. The challenge lies in how effectively they manage regulatory compliance and stay ahead of technological trends in these markets. Balancing cost optimization with expansion overseas is a tough task.
Yes, that's a complex balancing act. Building on their strengths, they have set a mid-term management target of 100 billion yen in sales by 2035.
That's an ambitious goal.
They have positioned their electronic certification and e-signature businesses as key growth areas, with their cloud infrastructure segment serving as a stable growth driver, while viewing the digital transformation, or DX, business as a potential leap forward. Just to clarify, by DX here, they refer to services related to digital transformation, correct?
Yes, that's correct. Let's review their Q1 results, please.
Certainly.
Sales reached 4,909 million yen, marking a new all-time high, which represents an increase of approximately 4% year-over-year.
A 4% growth.
Meanwhile, operating profit was 285 million yen, down roughly 32%.
That's a significant decline. Do we know what caused this?
The decrease is primarily due to higher R&D investments, increased marketing expenses both domestically and internationally, and higher personnel costs.
That makes sense. However, they are maintaining their full-year outlook. They expect to rebound after Q2, driven primarily by higher sales of VMC, Verified Mark Certificate, and timestamping products. What is your assessment of this forecast?
The performance of their core electronic certification and digital signature services will be decisive. In the first quarter, that segment generated 3,136 million yen, a 4% increase compared to the same period last year. Within that, GMO Sign contributed 453 million yen, a 39% jump.
Wow, nearly 40% growth. That's quite significant.
Yes, their annual recurring revenue, or ARR, remains steady, and they expect to turn profitable for the full year. Additionally, GMO TrustLogin generated 127 million yen, up about 36%. These two services are experiencing strong growth,
Almost 40% growth for GMO Sign, that's very promising. What do you think is driving this growth? Perhaps increased contracts with local governments or broader adoption by large enterprises?
Likely both. The number of local government contracts has increased to 153, and their penetration within large corporations continues to deepen. Furthermore, as the electronic contracts market expands overall, their brand recognition and functional features are gaining acknowledgement.
Understood.
On the other hand, their cloud infrastructure segment, regarded as a steady growth area, posted 1,693 million yen, a 7.5% increase, which is solid. And within this segment, CloudCREW by GMO performed particularly well, generating 616 million yen, up nearly 43%. That's rapid growth.
That is impressive. Possibly, obtaining AWS certification for SMBs contributed to this acceleration.
Exactly, that's a likely factor.
Their digital transformation, or DX, business, which they see as an upcoming major growth driver, recorded 212 million yen, a 13.9% decline.
Right. So that segment experienced a decrease. However, they attribute this mainly to timing delays in large projects. They remain optimistic about achieving their full-year targets.
Yes, it appears to be a temporary setback.
Indeed. Additionally, their key performance indicators, KPIs, such as the number of stores utilizing the GMO Shop app, have increased to around 40,000 shops, representing a 13.5% rise. Similarly, the number of registered meters for CloudCREW AI exceeded 70,000 units, also up about 13.5%. These figures show consistent growth.
Yes, these are positive indicators. On the corporate social responsibility front, they received certification as a company promoting childcare leave in Tokyo and are strengthening ESG initiatives. Good progress in aligning with societal expectations.
Absolutely. Such actions demonstrate their commitment to social responsibility.
To summarize, their Q1 results set a new record for sales, driven by strategic investments targeting future growth. Although operating profit was affected, their core services, GMO Sign, GMO TrustLogin, and CloudCREW, continue to post strong growth.
Yes, this is encouraging.
With over 28 years as a trusted provider of electronic certification services, a stable recurring revenue base, and a global footprint, they are entering an investment phase aiming for 100 billion yen in sales by 2035. They are also committed to improving working conditions and ESG efforts.
Precisely. They are leveraging their reliable income to accelerate investments in next-generation authentication technologies and innovative services like VMC, Verified Mark Certificate, and Trusted Time Stamping, areas critical in global competition.
True. However, the key question remains whether these investments will translate into expected earnings growth, which we will need to monitor closely.
Absolutely, that remains a crucial point. Finally, I would like to ask for your insights.
Of course. Please go ahead.
Their stated goal is to become a trustworthy infrastructure provider, offering reliable authentication on a global scale. Considering the rise of AI and quantum technologies integrated into society's foundation, how do you think the role of companies like GMO GlobalSign will evolve moving forward?
That's an excellent question.
It's fascinating to imagine how the very concept of trust in our digital society will evolve with these advanced technologies. Envisioning what this transition entails could be quite intriguing.
Certainly. How the very notion of trust might change under these technological advancements is a profound topic.
Exactly.
We change experience with IT. GMO GlobalSign Holdings.